Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Steve Sosnick, Chief Strategist at Interactive Brokers, to discuss why investors should be aware of the risks in the move in stocks in both directions. Steve, it's great to see you as always. Welcome back to Trade Talks, and this is such perfect timing for this particular theme. I think NVIDIA, after those earnings came out, was the perfect reason why you should care about moves on the up and down side.
Absolutely, Jill. There's a term that I like to use called socially acceptable volatility. And what we saw after NVIDIA earnings was socially acceptable volatility. We had a huge move up 3% on NDX and pretty much a big broad market rally. But that Thursday move could have gone in the other direction. We were very lucky. I'm not going to say lucky, but we certainly benefited from the fact that NVIDIA not only beat, but they raised their estimates, and this has been their pattern recently, which has been great. But imagine the flip side. Imagine if their numbers were only okay, or just was a modest beat and didn't raise, that sort of thing. And I think the market could have been very disappointed. And now imagine if you had a large move in NVIDIA in the opposite direction. I actually think it probably would have been worse, because markets tend to react worse on the downside than they do on the upside. So I think while we should be very thankful of the move that we had, again, the socially acceptable volatility that we had on Thursday, I think it does bear reminding that you do sort of need to consider insurance ahead of big, potentially market moving events.
Yeah, well, as you had noted in your piece, you don't want to have to think about insurance as your home is burning down. It's one of those things where you don't mind paying into because you don't want to have to access it.
Exactly. Yeah, if you're buying insurance, you don't want it to pay off. So I will admit I bought a few QQQ puts before the NVIDIA earnings, because I wanted to hedge my portfolio. I didn't hedge it one for one, but I did buy a couple here and there because I wanted to be able to say, if this thing has a drawdown, am I going to be protected? And I'm happy that it didn't draw down, because for the most part, I'm longer than shorter. But I certainly don't want to. I'm not rooting. I root for the idea that I waste my money on my collision insurance. I don't want to be in a car accident. I don't want my homeowner. I don't want to put in a homeowner's claim. So that was how I viewed the Q puts ahead of that event, was just a little bit of an insurance policy. And again, I think that the reaction that we had on the plus side to NVIDIA, goodness knows what that could have been if it was in the opposite direction.
Yeah, and how influential NVIDIA and a handful of other names are is so key, which is why it makes sense to put on QQQ puts and not necessarily just single stock puts. And let's talk about the power of NVIDIA and some of these other stocks here, and the AI story in general. That seems to really be taking over the market, even though we're not getting those 6 rate cuts that perhaps investors had expected, which in my mind could be a good thing now that we're kind of thinking about fundamentals more, not just solely relying on Fed policy for the direction of the market.
Yeah, I mean, the piece I wrote Friday was, dude, where's my cuts? And that's really an interesting phenomenon. If you would have, you and I talked, pretty much in December and January about this, about how, we were expecting, somehow the market was pricing in good earnings, which implied a good economy, and at the same time, way out kicking the Fed's estimate of 3. The Fed said we kind of see 3 rate cuts in 2024, which was where the market was before the December Fed meeting. And then the market said, okay, we see that, we raise you to 6 or 7. Yet somehow we've gone back to between 3 and 4, but without any real penalty. Again, that's because the earnings have been okay overall, but they've been really good where it mattered. And that actually really benefits the stocks in NDX even more than the stocks in SPX, because it's been the mega cap technology stocks, think Meta, think Amazon, which outperformed, and of course think NVIDIA, that have helped propel the market higher. And so the Nasdaq stocks have been really the backbone of this move higher, and what's allowing the markets to sort of say that the earnings are good overall, when in fact they're probably a bit more top heavy than not. But also to say, we could ignore the fact that in this calendar year so far, we've seen long-term rates back up about 50 basis points, and we've seen rate cut expectations fall by somewhere between 75 and 100 basis points. That's pretty impressive.
Yeah, it certainly is, Steve. And we're going to have you back on March 15th, along with Steve Wyatt at BOK Financial, to discuss fiscal policy longer term. But another thing we have to think about over the weekend, in the near term, we're looking at potential government shutdowns again if we can't get some sort of an agreement on what this balance sheet is going to look like.
Yeah, yes, and that's I think one of the unsung risks. I mean, it's interesting because we did see the volatility measures, VIX, and some vol Q kick up a bit last week, and that I do think that was largely I think ahead of the Nvidia earnings for the reasons we said that they had the potential to move the market in a big way, and people were trying to hedge against that. Remember, by the way, Nvidia fell 10% from last Friday, a week ago Friday rather, to Tuesday before the earnings. So this wasn't necessarily happening in a vacuum. But now I think we're looking at the idea of a government shutdown coming. Congress, the House decided to take 2 weeks off in spite of the fact that the government could shut down as early as Friday. I don't know how they push this across. I'll leave it to the political analysts. But the market's always, when it comes to things like government shutdowns, when it comes to sort of political subtleties, this is not where the stock market and where stock traders are at their best. I think, particularly in the case of shutdowns, it's more or less we'll deal with it when we have to. And the reason for that kind of is, we've seen a lot of false alarms regarding government shutdowns before, and this one would actually be a rolling shutdown. So it gets to be a bit tricky, but I do think that it's sort of a little too far in the market's back burner right now, because foreigners don't love the idea of U.S. government having any inabilities to carry out its major functions, and we'll have to see how that portrays, and if that becomes a bigger factor as the week goes on.
All right, Steve, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.